Hello people, what is up? I hope you are all doing well. Today we have a guest on our show, the Anujvohra show, and the name of that guest is Sheldon Martin. Sheldon belongs to San Diego, United States. He started making money at the age of 10 by selling candies. His parents taught him the importance of personal finance early in his life. Right now, he is 27-year old and doing his business on financial consulting. He did corporate job for 4 years and left the job and focus on his business. So let's learn from Sheldon regarding personal finance and investment. So listen to this podcast till the end because we are going to cover a lot of things regarding finance and investment in this particular podcast. Feel free to follow Sheldon on Instagram. His Instagram ID is Credit Sheldon. You can find the link in the description below. So now let's begin with the podcast. To begin with, Sheldon is sharing what are his thoughts on inflation and where do he prefer to invest his money.
And of course, around the world, there's something called inflation. So inflation is the price of goods going up. So today, today the piece of fruit you might buy maybe 50 cents, but in 10 years that fruit's going to be $5. So you want to make sure your money's keeping up with the price of goods going up. So that's the first reason why I invest. The asset classes I invest in is the stock market. I invest in cryptocurrency. I invest in I used to invest in I invest in real estate. We do something called fix and flips where we buy them cheap, fix them up, and resell them quick. And then I also invest in emerging markets and then international markets as well.
Okay, so which international emerging markets would you prefer to invest?
Yeah, so I have what you call what do you want to call it? So emerging markets will be your countries like Australia, the places like Japan. So it's places that are not as developed as the United States, but are pretty developed. And then I also invest in what we call, I can't think of the name of it specifically, but I also invest in places like India. I invest in places like South America, Central America, places that are not as developed as emerging markets or as developed as some place like United States or Europe. So I invest in pretty much other countries because my main focus as an investor is to make sure that my money's diversified into different industries, different sectors, different countries, states, etc. So.
And obviously, as you live in the developed nation, you simply put your money in developing nation, you will definitely get high returns. You can easily get double digit return, and in the United States the index give nearly, I should say, 7 to 8% of return. So it is good strategy as a resident of the United States.
Yep, exactly. I'm investing in a developing or underdeveloping market that's coming up. You can easily make double-digit returns, but also it can be more risky. But then it provides me the diversity because if the market in the United States if the indexes in the United States are bad, then I can fall back on Europe or fall back on Australia, Japan, India, whatever the case may be.
Yeah. So I'm actually excited to know that what are your thoughts on tech stocks in the United States, because as we know that all the tech giants in the world belongs to the United States, and they as soon as they list their IPO, their market capitalization is just skyrocket. In just 2 to 3 years they just become a 70-80 billion dollar company with market capitalization easily. So according to this data, I come to know that there is tremendous rush. People are so excited to invest in technology based stocks. So what are your thoughts, and do you have obviously you will definitely have some portion in tech stocks also. So what are your thoughts on this?
Yeah, so my thoughts in tech stocks are, when I think of tech stocks, I always think overvalued. So overvalued. The reason being is because tech stocks are usually growth stocks. So there's three different types of investors. You have a growth investor, income investor, and value investor. People investing in tech stocks, they're looking for more of a higher return. They're taking more risk because the problem with tech stocks is that people are buying too high And when they buy too high, what's going to happen is they're getting FOMO, which is called fear of missing out. They don't want to miss out
Yes.
on the big jump. So they buy at the top. And what happens is a correction happens in the market, and then they sell quick because they don't really know about investing, and they're being emotional investors opposed to long-term investors, and it just messes up the market. So I like tech stocks, but with that being said, I don't like to be overexposed to tech stocks just due to the nature of it. It's been, we've been on a bull run for the last bull run,
Uh,
meaning the
11
stock
years,
market's
I
been,
should
yeah,
say.
yeah. And it hasn't really declined like that. So I'm kind of on the edge, but I do own tech stocks like Apple. I own Tesla. I own Square, PayPal. So I own a few tech stocks at this time.
Okay, so I mean, if investing in good tech stocks like Apple, Microsoft, Facebook, even Amazon is a little bit expensive, but
No,
it is always good deal because these companies are dominating in the world, and they will
exactly.
uh, continue to perform well in the long run as well. But if we think about a very small companies which are just getting started and they just launch their IPO in order to raise money, then according to me, it is not a good way to invest your money because there would be risk by investing in such kind of stocks.
Yeah. So the reason IPOs are not the best bet is because I'm not sure if you guys do it there, but in the United States now, a big thing is traders. So people want to trade and day trade, right? So
Yes,
what
yes.
happens is when an IPO comes out, there's all this hype around the IPO. So like we had one that just came out, which was Coinbase, which is the first, it's basically the first broker where you can trade stocks. It's the first publicly traded broker where you can trade, not stocks, where you can trade crypto. So basically, when you have these IPOs, everybody's excited, and you have all these traders jumping in the first day because they know it's going to skyrocket. And what they do is when they make a certain percentage profit, they're going to sell within the next 2 weeks. So say you as a long-term investor, you jump into an IPO, you buy because you see it skyrocketing, all the traders sell off, which decreases the price. And then from there, you're automatically 30% down in 1 week. So then you have to long term, it's probably going to go back up. You're going to have to keep it for a year just for it to recover from that 30% of the day trader selling. So that's why IPO strategies are not the best strategies unless you're trading for a short term. So
But even if we think about the long-term investor who is just getting started as a long-term
mhm,
investor, when he or she sees that his investment has gone down by 30%,
mhm,
she or he will start believing that stock market is completely gambling and we should stay away from investing
yeah,
in stock market. So
mhm,
I have my clients and they keep telling that why I do not prefer to invest in IPO. But my logic is simple that I prefer to invest in fundamentally sound companies which are already
exactly,
stable in the stock market. I am not looking
exactly,
forward to invest in new companies which are
mhm,
no experienced in stock market.
exactly, exactly. Yeah, IPOs, they don't have any fundamentals yet, like you said. So when you're looking at like like Google, they've been successful for 10 years. Amazon, Apple, they've been successful for a long time, and they actually have data behind it that backs that information up, like fundamentals. When you're looking at IPOs, their fundamentals are not yet sound. So essentially,
Yeah,
it's a gamble.
yeah,
So
definitely. It's a gamble, and it is good for uh, the people who know about trading, who have
exactly,
an expertise
exactly,
in trading. It is not safe for know nothing investor and long term investors.
exactly, exactly. Totally agree. Totally agree.
And do you have dividend stocks in your portfolio?
Yeah, I have dividend stocks in my portfolio. Pretty much when I first started out, I wanted to make sure all my stocks were dividend stocks. But since I'm so young, I have a longer time horizon, meaning longer time to invest. So started to become more I started to gamble more with tech stocks, which most tech stocks don't really have dividends. But yeah, I love dividend stocks. It's guaranteed income. I reinvest my dividends so it can compound over a span of time. So yeah, I think dividend stocks is a good way to invest, especially if you're investing for the long term and you're reinvesting your dividends. So.
Yes, yes. As I've read so many articles regarding that the people can make tons of money by investing in dividend stocks. But if I talk
Mm-hmm.
about my country where I live, there is not that much trend towards dividend stocks. And
Oh, wow.
people believe that growth stocks are the good option, that we can
Mhm.
double our money faster.
Of
So
course.
it's about greed or a different kind of investment strategy. But I also believe that the dividend stocks are the great way to invest to earn passive income.
Yeah,
One of
for
the
sure.
things that I would like to tell you over here is that Warren Buffett earns nearly $650 million from the dividend of only Coca-Cola.
Yep. Exactly. So as I said, so you have young people like me that I don't need that money to live off of, so I can reinvest it. Or if you're somebody that's retired, like you want to make passive income, you can literally put all your money in dividend stocks and make a check every month, and literally just get passive income for free every month. Of course, you have to pay taxes, but as long as you plan accordingly, then you'll be fine. So it's a good way.
Yes. And
Yeah.
another thing regarding cryptocurrency, and because it's now a trend, because everything, the ups and downs in the cryptocurrency market is based on the tweets of Elon Musk. So it is
Exactly.
heavily dependent on a single person, or I should say 2 to 3%, Mark Cuban, Elon
Yeah,
Musk.
to yeah.
Yeah. So basically, what do you feel about investing in cryptocurrency for the longer period
Yeah.
of time and for the shorter
Mhm.
period of time as well?
Yeah, great question. So, okay. So, without being too technical, I think that crypto is a good thing, especially for diversity, and it's a good hedge against inflation, and it's a good hedge, meaning hedge like it goes against the stock market. There are two different markets. With that being said, I don't believe in. There's literally over 1,000 different coins you can put your money into. I don't believe in all. I call them. There's a lot of coins that don't have any fundamentals at all.
Yes.
Me
Yes.
personally, I think that if you're going to invest in crypto, you should stay with the top five cryptos and market capitalization. But really, the top two would be Bitcoin and Ethereum for me personally, just because it's those are the oldest coins and they have the most money invested into them. And like I said, Bitcoin is just a coin that's being more accepted by these larger Fortune 500 companies around the world. And Ethereum, of course, is it's a coin that it has some of the, it basically has, it transacts money the fastest out of a lot of the coins out there. With that being said, the money that you invest in crypto, my thoughts about it is that it should be extra money that can be lost and you
Yes.
don't sweat,
Yes. Yes.
because
Exactly.
crypto is very volatile, meaning it's just up, down, up, down. So you can make a lot of money, but you can lose a lot of money as well. So you do not put the last of your money in crypto. I think you should put a portion of your money. I'd say no more than 20% of your portfolio altogether, really no more than 10%. But if you're younger, you can do 20% between your stocks, crypto, real estate. But it's not something you should put all your money into, or I guess your last money. It should be all money that you're okay with losing just due to the volatility of crypto. So
Okay.
but I do think
Okay.
it's the future. I think it's the future of our money, just due to inflation, us printing a lot of money in the United States, even printing tons of money, due to what's going on with COVID. And basically, we've been giving out so much free money that it's raising our price, which is inflation, is raising our price of goods. And if we keep printing at this rate, then we need something that's decentralized, which is crypto. So we need something that's not regulated by our government. If that makes sense.
But yeah. So you just said that obviously cryptocurrency is not regulated by any government. So if
Yeah.
people start leveraging more and more cryptocurrency, uh, can it damage to the banking and finance system of that particular country?
Yeah. But really, remember, so this is where it just gets difficult to explain. So really, crypto is, that's the reason why they're trying to regulate crypto, because the banks essentially could be out of business if everybody went to crypto. But with that being said, it's almost impossible. You have your old school people that are never going to go to crypto, just how you have your old school people that are only going to use cash. They don't use credit or debit cards, or
Yes, agree.
yeah. So it's almost impossible for everybody to transform over to crypto, just due to the technology differences with some people that are old school. But the banks most definitely will be in trouble if a lot more people started to transfer over to crypto. But eventually, I think that it's a more efficient way to transfer money. It's a more efficient way to make sure that no what do you call it? No government is doing anything fishy with the money, just because it's not controlled by them, and it can't be. There's a lot of uh, there's a lot of, I can't think of the word right now. Basically, there's a lot of things that happen with our money in the government that is being controlled. And with crypto, it's almost impossible to control it because it's ran by the blockchain and not by any government or specific person.
No,
So
actually, the reason behind asking you this question was that I came to know that China has launched its digital currency, and obviously, it is regulated by the Chinese Communist Party. So,
yeah, yeah.
if the same concept is apply if we apply in another country, then we can manage to regulate cryptocurrency as well.
hmm Well, they won't be able to. They will be able to manage cryptocurrency. They won't be able to manage Bitcoin. Like they'll have to make their own, like China did. They'll have to literally. The banks will have to make their own cryptocurrency, like a global United States cryptocurrency, and then they can manage it because they made it. But it's impossible to manage like a Bitcoin because it's ran off a blockchain, which nobody has access to that. It's like a bunch of technology. Like that's where it gets like very technological. But yeah.
Yes, okay. So my final question is that how did you manage to retire from your corporate job, and when did you decide that you should go with your business, which is
Yeah.
financial consulting and like crediting and all such things?
Yeah. So what I did was the last, maybe 4 years, I've been doing my full-time job, making sure I'm getting promotions to increase my income. I've been living super frugally. So when I first moved, since I got a scholarship to go to college for football, I didn't have any student loans.
All
When
right.
I moved back home from college, I stayed at home. I lived at home with my mom for like 2 years. And during that time, I just saved all my money from my corporate job. And at the same time, I was working on my business full time as well. And I did that for about 4 years. So I was working on my business, making sure that I had everything in place while also working my full time corporate job. So I was saving all this money. And not only was I saving this money, I was investing this money. So through time, you have what you call compound interest, which is basically, your money starting here, it doubles, quadruples, you know what I mean? So my money started to grow from just investing every single week. Every single week I invested my money. So it started to compound through time. And then also made sure I had money stashed away and saved as well. And then eventually one of my businesses started making more than my full-time income. And at that point, I didn't quit immediately. I waited for about 7 months for one of my businesses to make more than my full-time income before I quit. So I quit probably in November 2020. And then from there, I had other businesses that started to make more than my initial business. And I had other business, like I have like 3 businesses that are
All right.
making more than my corporate job. So then from there, it just allowed me to have financial security. It allowed me to quit corporate, focus on my businesses full time. And then also I started hiring employees to help me out with the workload, so I'm not working all the time and I can travel around the world and stuff without worried about making money. So
I mean, you quit your job after the COVID crisis. That's really amazing. No one has that
yeah,
much courage to quit
yeah,
job during that particular, I mean, difficult
yeah.
time.
Yeah, November, it was like literally right smack dab in the middle of COVID, because COVID started maybe in March
Yes,
or,
yes.
yeah, March. So it was literally in the middle of COVID. People were losing their jobs. People didn't have money. And luckily, the businesses that I run, especially like for credit, it's what you need, a need-based business. So no matter what, people need it, no matter what economy you're in. So it's a recession-proof business. So in the United States, when you want to buy a home, you need good credit. When you want to buy a car, you need good credit. When you want to rent an apartment, you need good credit. So it's almost impossible for people not to need my services, no matter what type of industry or what type of economy we're in at that time. You know what I mean? So,
All right. So you said that you lived 2 years with your mother. And
hmm
I've observed that mostly when students reached at the age of 18 or 90, they generally leave their house and they live separately, and then they
hmm
don't prefer to live with their parents. So is
yeah.
this right, or is it limited to only some students, or some students only, that only 5-10% of students are only prefer to live separate? And
Um, I think it's high. I think it's about like 50. When people graduate, some people's been away. Like the people that go away to college, I found out that those people don't want to move back home to their parents' house. The people that stay at home and go to college, they have less debt. So then they want to move out once they graduate college. So that's usually what the decipher is between the people that stay home or the people that move out after college. So
All right, all right. I mean, that's amazing.
yeah, I guess what are you currently what are you doing for work out there?
I mean, I'm a investment advisor in India, and
Oh, okay.
I help people to uh, manage their finances. I mean, there are people who have different kind of risk taking ability. If
Of
youngsters are
course.
there, they have different type of risk taking ability, and a person with the average age of 45, 50 have different types of risk taking ability. So based on that, I advise on investing in mutual funds and
Okay.
and stock market as well.
Okay.
And
Got you. Okay. And what are you, as far as the investments you guys are investing in, is that like India equities? Is it, are you guys invest in the United States, or how do you guys invest with your clients, with your mutual funds or your individual stocks?
yeah, typically I prefer to invest in Indian equity markets because it's very emerging market, right? And it is right now it is sixth largest economy, and it is one of the fastest growing economy in the world. And
Yep.
the upcoming years of India is really good because the young population is so much that, I mean, 600 million people are young in India with in a
Mm-hmm.
population of 1.3 billion people. So it's I should say a
Wow.
huge market, and that is the reason businesses are coming over here. And as the consumption increases, businesses will continue to make more and more money. So according to me, according to my research and my thoughts, that Indian equity markets will continue to perform really well over the period of 15, 20 years. I'm not talking about 2 to 3 years, I'm talking about 15, 20 years, because we never know
Wow.
what will happen in the shorter period of time. There can be
Yeah.
some worst case situation like war between India and Pakistan as well. So we never know what will
Mm-hmm.
happen. So this is what I specifically. I also prefer to invest in the U.S. mutual funds that are international mutual funds. But in
Okay.
India, the trend, there is no that much trend to invest in international funds because uh, basically the mutual fund industry in India is very small.
Mm.
Only,
Gotcha.
I should say, only 3% of Indian population prefer to invest in financial markets.
Mm. It's crazy. Wow.
So yeah, I mean, it's emerging. People have started understanding the importance of finance, and this is what I do. That I educate. I also educate people, and then I advise that you
Mm-hmm.
need to do this kind of stuff in order to create wealth and all
Yeah.
such things.
That's great. And last but not least, what company out there is like the Google or the Amazon in India right now?
Sorry.
What company in India is like the Google or Amazon of the United States?
So are you planning to invest? If I say that you would, I would advise you to invest in the first is Reliance Industries.
Okay. You said
I
what industries?
Reliance.
Reliance?
Reliance. Do you know the deal between Reliance Jio and Facebook?
No, I don't.
Facebook invested nearly $7 billion in Reliance Jio.
Huh. Yeah, I have to chat with you offline to get the name of
Yeah,
the
yeah,
company
yeah,
and
yeah, for
everything
sure.
like
There
that.
are a bunch of companies in which you should invest, and you can expect, I mean, 15 to 20% easily because these companies are growing rapidly.
Yeah, gotcha. Okay, yeah, sounds good, man.
I mean,
That's
there
pretty
are
much. Go ahead.
another thing that do you know how big India's IT industry is?
I don't. I don't.
So basically, after the United States, India is the second largest uh, hub of information and technology. So basically, the
Oh,
if I explain in the simplest language, the US is the place where people innovate, and India is the place where people develop.
yeah. Yep.
So
Yeah.
people who live in the United States develop the idea that we should make this kind of software and application, and they just give order to Indian companies like TCS, Infosys, HCL Tech, and this kind of thing. So the if I tell you the 5 year horizon, the industry has given nearly 30 to 40% return.
Oh, wow. That's pretty good. It's pretty good.
Yeah.
It's pretty good. Okay,
Yeah. So
perfect, man. Well, yeah, I appreciate the information. Like I said, I'll probably just chat with you offline with those companies there. But yeah, I don't have any other questions for you. Like I said, thanks for all your time, the interview. It was great.
yeah, I mean,
And yeah,
thank you for joining. Thank you for spending your time. I mean, thanks for listening. If you find this episode valuable and you would like to help support the podcast, feel free to share it with others, post about it on social media, or leave a rating or review. To catch all the latest updates from me, you can follow me on Instagram at anujv21, that is ANUJV21. Thanks again, and I will see you next time.